Hello and welcome to India's Angels, the show that puts the spotlight on the value of risk capital and its evolution in India. I'm Shireen Bhan. Now, investing in a social enterprise in India has become quite the in thing, and the definition of who is a social entrepreneur seems to be changing as well. So to take stock of what's happening in this space and how we should look at social capital, we met with some of the earliest players in the business. On the show this week, Rajiv Lal, Vishal Mehta and Venki Natarajan of Lok Capital talked to us about their journey since 2004 and the opportunities and challenges of making investments in the Indian social entrepreneurial space.
The most important indicator that I'm looking for is what is it that drives the particular individual that we want to back.
Honestly, I think the biggest satisfaction is our people that you've been associated with and the relationship that you've been able to build.
We believe we have one of the best processes out there in terms of both portfolio management as well as building a pipeline.
It was the proverbial urge to do something more that brought the team at Lok Capital together.
I was looking for a way to bring my experience to be relevant to what I thought the need was in the country.
I met with Rajiv, I met with Donald and I met with Vishal. The ethos were completely aligned.
I knew that I'm going to be part of a social enterprise. I knew that we're going to be based in India, and I knew that I'll have to start from scratch. That's all I knew. And all these three things sounded very exciting, and I said yes.
Then a managing director with Warburg Pincus in New York, Rajiv Lal and Donald Peck of the Commonwealth Development Corporation and Actis fame set up Lok Capital in late 2000 with a grant from the Rockefeller Foundation. The idea was simply to find a way to facilitate entrepreneurs who wanted to address the inclusion challenge in India.
Because I was in the private equity business, the idea of creating a fund that focused on making investments that didn't seek necessarily to maximize profits, but rather to satisfy profits. And when I say satisfies profits, it's an economist term, which basically means it's an optimization of the profit motive. So it's the profit motive tempered with wider objectives. And the wider objectives being objectives that go beyond the simple bottom line, but seek to have an impact and make a difference in other measurable terms to the people that you're serving.
Today, Lok Capital manages two funds and has over $85 million under management. While Fund 1 was focused only on the microfinance sector and counts amongst its investments some of the better performing MFIs in India like Janalakshmi, Ujjivan, IFMR, Satin and Basics. The second fund, worth $65 million, raised in 2011, has taken a broader view of inclusion, investing in education, livelihood and healthcare as well. With 4 successful exits so far from Fund 1, with internal rates of return between 15 to 35% and only one major write-off, the learnings from the hits and misses have been important for the team at Lok Capital.
Social enterprises does invoke kind of a Robin Hood image, right? And it is very easy in this space for people to get into a premature celebration mode. And that can sometimes take the focus away from the business, right? These are very tough businesses. Then working in rural areas, working in that kind of infrastructure, and then policy and regulation, regulatory hurdles. Add all of that, this is a very tough space. So focus, as I said, is one challenge that we see. I think also we have seen premature scaling as one of the other challenges, where before establishing your proof of concept in one particular geography, there is a tendency to go and scale it up prematurely.
And Vishal speaks from first-hand experience. Loke Capital began investing in the microfinance space in India in the early 2000s before MFIs became fashionable. But as money and private equity investments flooded the sector in the mid-2000s, growth became the only mantra for success. Inclusion in the truest sense of the word perhaps took a back seat.
What we found is that microfinance, by definition, is a capital-intensive business. It requires a lot of equity capital because it's a balance sheet business. We were a small fund. So we could not possibly provide all the capital needed by investee companies. These investee companies, in search of size and scale, turned to other sources of capital. And as it happened, they turned to purely for-profit sources of capital. And as the weight of that capital relative to our capital grew in our investee companies, we found that the objectives of the social entrepreneurs that we were backing themselves began to change. I don't blame them. They were driven in large part by the logic of the capital that began to back them.
And Loke Capital has learned its lesson from the crisis. With their second fund, the team has revised some of its investment parameters like the ticket size and the stake taken in a company to guard against conflicting ideas of growth that might creep in.
Initially in our first fund, we used to take 5%, 10% stakes. What we realized is, in order to maintain the social fabric of the investments and until the business model is stabilized, we need to have like-minded, aligned investors being part of the company. So in the second fund, our biggest learning has been take 25-30% stakes to begin with. And as the company evolves, as the business model matures, as they become more and more profitable, we also have the capability to bring in some of our limited partners as co-investors who are completely aligned with us.
The team at Loke supports the RBI's new norms for MFIs. They believe it was necessary to rein in practices that were not sustainable. And this view is echoed by Loke Capital portfolio company Ujjivan as well. For Samit Ghosh, innovating while sticking to the rule book is second nature. After a 30-year banking career with Citi, Standard Chartered and HDFC Bank, Samit was very clear he wanted to set up an MFI and he wanted to venture into a territory that had been ignored by both commercial banks and microfinance institutions thus far. The invisible urban poor.
I think it's the philosophy, in terms of our mission. I think there was a sort of unity in that area. I don't think there was, urban attracted them because, that was a neglected area. The urban poor has been neglected by everyone, whether the government or whether other MFIs or other NGOs. So that did attract them. But I think this kind of a balanced approach in terms of achieving both our social goals and our financial goals is what attracted Loke to us.
To achieve its mission of driving social good, Ujjivan also set up a not-for-profit arm, Parinam Foundation. The foundation is primarily concerned with providing critical social support in healthcare, education, livelihood to urban poor families who make up Ujjivan's customer base. With programs on financial literacy like this one, the foundation is not only complementing Ujjivan's activities but also creating a social value.
Apart from Parinam, Ujjivan runs some social development programs on our own. We have something called the Social Development Program, which first came about when we first started making profit. And our investors like Loke, etc., felt that a portion of our profit should go back to our customers and the community where we work in. So we allocated a certain amount of our profits every year for social development programs to be carried out by every branch along with our customers and staff. They identify small community kind of development projects, whether it's in Anganwadi or rainwater harvesting or making steps on a mountain path in the northeast, whatever the community needs. These are very small interventions which are carried out, and it is done directly by Ujjivan staff and Ujjivan customers, and we fund it. Ujjivan funds it.
And this is a structure that Rajiv Lal has created for Lok Capital as well. Back in 2003, he set up Lok Foundation as a Section 25 company or a not-for-profit entity. The mission was simple. Profits generated from the social investment arm Lok Capital were to flow back into the foundation, which would in turn use that capital along with grant money to create a strong platform for inclusion with technical support, research and advocacy.
In America, they gave credit to the poor and said, this is how we'll equalize you. In Europe, they use the welfare state. In India, neither do we have access to cheap credit, nor do we have unrestricted fiscal space to accommodate these pressures, political pressures to deliver inclusion. So we really have to find a different model for delivering inclusion. Right? That's where philosophically Lok Capital and Lok Foundation fit in. The objective philosophically of Lok Capital is to seed experiments to deliver inclusion in a commercially self-sustaining way without impinging on the fiscal resources of the state. Lok Foundation is focused on the process of social inclusion. So things like what are the trends in caste-related biases, religion-related biases, gender-related biases. How is Indian society evolving along all these metrics? So Lok Foundation aims to research and monitor and make available in the public domain are changing social attitudes.
And it is this underlying motivation that the team at Lok looks for in investee companies too. The most important filters revolve around the entrepreneur's background, his or her motivation in starting a social venture, and the market the business is expected to serve.
80% of the criteria, I would say, would be largely on who are the people behind this and why they're doing it, right? As subjective as that. I don't think we can ever put a formula on that. It's largely based on what we feel is the motivation behind the business, and are these motivations, for example, any similar to why I and Venki and others in the team are doing Lok.
Secondly, the business model, and is it really catering to the segment that we want to focus on? And third is, what have they accomplished so far, and whether they have other investors on board, and who are those other investors? Whether are they aligned with us, or do they have different motivation than us?
Well, it is a fine line for both the investor and the entrepreneur. On that note, we take a break, but on the other side, we meet the teams at Rural Shores, a rural BPO, and Drishti Eye Care to understand what drives Lok Capital's investments.